The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is Mineral Resources. Its shares are surging as it looks to cut costs, particularly in its lithium division. So it said after market close yesterday that it's identified $180 million in CapEx savings and $120 million in operational cost savings. And that includes cutting the hours available to employees at its Mount Marion and Wodinga operations, so changing the roster there. MinRes, though, is maintaining its production guidance in light of those cuts. Separately, the sale of its Haul Road has been approved by the Foreign Investment Review Board. That deal will net Min Resources $1.3 billion. So let's go to my guests, Ben Richards from Seneca Financial Solution and David Lane from Ord Minnett to get their view on MinRes. Guys, I put a little bit of a poll up on X today saying, is the bottom in for Mineral Resources? What do you think, David?
Well, it's certainly looking like it. If you look at the share price today, it's up 17%, as you said, but coming off very low base. So we have seen the price of Mineral Resources sold off quite significantly over the last 6 months or so, as most of the other lithium companies have been. Definitely the announcement overnight is a positive as far as the company is concerned. We did see in their last result that they've cut their dividend. So the company's very focused on their costs. Their balance sheet is very, very solid. So they've got liquidity reserves of about $2.8 billion, and that's prior to the $1.3 billion that they'll get from the sale of their haul road. So I think Mineral Resources is in a good spot. We've actually got an accumulate recommendation on them. And if you are willing to take a long-term view on lithium in particular, but they do have some other assets, iron ore and other minerals, I think Mineral Resources is a good way to play that theme. So
that is a buy?
Yeah, we've got an accumulate, which is effectively a soft buy. So it means that when the share price is weak, you can add to it. So yes, we'll call that a buy.
There you go. I'd like to get a bit of clarity from my viewers and listeners. David, thank you very much for playing along. And what about you and the team there at Seneca? I mean, there's been a lot of talk about just how poorly Mineral Resources has been treated in the wake of its result, but it's got a lot of debt. I mean, I suppose this sale of the Haul Road being approved does bring some money into the coffers, but is this a now story for you, or is this a later when we see a fundamental turn in the lithium story, in particular, iron ore as well?
Yeah, I think it's one of the most polarizing companies on the ASX at the moment. Lots of interesting views out there. I think, to your point, the Haul Road does make a big difference. I'll probably disagree with David in the sense that I think the balance sheet actually looks really stretched here. And that's what's kind of driving a lot of negativity in the market at the moment. That's what's kind of seen the share price fall from $70 to $30. And although the news is good in terms of the FIRB approving the Haul Road sale for $1.1 billion, and there's also a bit of a kicker, 200 mil if they can get to full production ramp up, I think it doesn't solve the broader problem, which is that you're still left with probably $3 billion of net debt in an environment where commodities are not your friend. I think it's one of these commodity stories that it probably overshoots to the upside and overshoots to the downside as well. I think you probably have overshot into the downside now. There's a good short interest in the company. It's about 8% short interest, which is, for a company of MinRes's size and quality is quite unusually high. And I think what we've seen this morning with that, it was up 20% in morning trade, alongside a lot of other lithium names, is a bit of a short squeeze and some short covering. There was some news out of China, CATL, large Chinese battery manufacturer, has halted production at one of its lepidolite mines, which is that high-cost, low-grade lithium production out of China, which has been, flooding the market for lithium and depressing the price. So, the Australian players like Pilbara Minerals and MinRes have been really struggling in that lithium price environment. And having said all that, we think that MinRes is a high-quality company. It's got great mining services, assets, and its new iron ore project in Onslow is something that I've gone pretty deep into, and it looks like a really attractive project. It unlocks kind of the whole West Pilbara iron ore region, and we think it could generate some really good earnings. So it's just the question of, will they need to raise capital, or can they pull those non-dilutive levers that's kind of keeping us on the sideline for now. So I think we're quite neutral on it. We're keen for a buying opportunity should one present, but it's probably a neutral or a hold for now.
Got it. Thank you, guys. Really appreciate your view on Min Resources.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.